Good day and welcome to the D-Marq-AnalyticS channel. For this week we will be looking at batch 4 of 12 of 5 stocks. This is just a suggestion for you all to consider and research, and certainly not financial advice. Let's get started. The first stock in our video today is a wide moat stock that is in the application software industry. The stock is Cadence Design Systems Inc., ticker CDNS. Cadence Design Systems is a provider of electronic design automation, EDA software, intellectual property, IP, and system design and analysis products. EDA software streamlines and supports the chip design process, improving design accuracy, productivity, and handling of complexity through a comprehensive end-to-end solution. Cadence offers a portfolio of design IP, along with system design and analysis products that facilitate system-level analysis and verification. Its stock had much better total returns when compared to the S&P over the past decade. Since we invested in it, it has had an internal rate of return of 25%. It has a return on invested capital of 20.55%. It has a levered free cash flow of $1.51 billion, a current ratio of 2.82, and an Altman Z Score of 12.74 with no short-term debt. Cadence Design Systems is recognized as a leader in the electronic design automation (EDA) sector. Its strategic partnerships, particularly with NVIDIA, enhance its capabilities in AI infrastructure and chip design, which are anticipated to drive future growth. The company enjoys high recurring revenues thanks to its subscription model, strong client retention, and a focus on AI-driven product innovation, all of which contribute to its long-term growth prospects. Cadence's significant investments in research and development, along with solid partnerships with major semiconductor companies like NVIDIA and Intel, are expected to further support its market share growth in the EDA and intellectual property (IP) markets. Second stock in our video today is the magnificent super-wide moat Taiwan Semiconductor Manufacturing Company, ticker TSM, in the semiconductor industry. Taiwan Semiconductor Manufacturing Company, TSMC, is the world's largest dedicated chip foundry, holding a market share in the mid-60s as of 2024. Founded in 1987 through a joint venture involving Philips, the government of Taiwan, and private investors, TSMC went public in Taiwan in 1994, and later as an American Depository Receipt, ADR, in the United States in 1997. TSMC's scale and advanced technology enable the company to maintain solid operating margins despite fierce competition in the foundry business. Additionally, the transition to a fabless business model has provided favorable conditions for TSMC's growth. The company boasts an impressive customer base, including major players like Apple, AMD, and NVIDIA, all of which seek to leverage cutting-edge process technologies for their semiconductor designs. TSMC employs over 83,000 individuals. It has a fast dividend growth rate of 11.1% and a very strong credit rating of AA-. It has a levered cash flow of $23.76 billion, a current ratio of 2.37 with a high Altman Z Score of 9 and no short-term debt. TSMC's advanced manufacturing processes now account for 69% of its revenue, with significant growth driven by demand for AI technology and substantial capital expenditures, particularly in the US. As a leading force in advanced chip manufacturing, TSMC is benefiting from the increased demand for AI and strong relationships with its clients. Its global expansion and investments in the US help reduce geopolitical risks. TSMC maintains a competitive advantage, with its yield and production capacity exceeding those of its competitors, making it a preferred choice for major tech companies. The third stock in our video today is UAMY Corporation, ticker XIACY, in the technology hardware storage and peripherals industry. UAMY, founded in early 2010, is a pioneering technology company focused on smartphones, Internet of Things (IoT) products, and related internet services. As a leader in online smartphone sales, it uses its customized Android operating system, HyperOS, and has developed its own system-on-chip. Facing fierce competition in China, UAMY expanded into new markets, becoming the smartphone leader in India and gaining ground in Europe. From 2020 to 2024, about 50% of its revenue was generated in mainland China, down from 94% in 2015. The company made its debut on the Hong Kong stock market in July 2018, marking a significant milestone. Its stock had better total returns when compared to the S&P over the past 5 years. It has a levered free cash flow of $8.28 billion, a current ratio of 1.29 with no short-term debt. Since we have invested in it, it has had an incredible internal rate of return of 226%, and it has a return on invested capital of 11.58%. Xiaomi's electric vehicle, EV segment, has experienced rapid growth, particularly with the SU7 sedan and YU7 SUV, which have received a strong market response. This success has significantly contributed to the company's diversification and profitability. The company's human X-Car X-Home strategy enhances cross-category engagement, improves operational efficiency, and strengthens its balance sheet, leading to a positive outlook. Additionally, Xiaomi's innovations in artificial intelligence, AI, and chip technology, including the X-Ring 01 chip, position the company as a leader in self-sufficiency and advanced hardware design, allowing it to compete effectively with global tech giants. The fourth stock in our video today is United States Antimony Corporation, ticker UAMY, in the diversified metals and mining industry. United States Antimony Corp is a fully integrated company involved in mining, transportation, milling, smelting, and sales. It operates in two main segments, antimony and zeolite. The company offers a variety of products and services, including antimony, silver, gold, zeolite products, as well as storage, handling, and packaging services. Geographically, the company operates in the United States, Canada, and Mexico, with the majority of its revenue generated from the United States. UAMY has a current ratio of 2.21 and Altman Z Score of 9.65, with no short-term debt. United States Antimony Corporation, UAMY, is experiencing revenue growth driven by strong demand and increased sales prices for its antimony products. The company has ambitious plans to expand its smelting facilities in Montana and Mexico, which will significantly increase production capacity. In 2025, UAMY reported impressive financial results, including a 160% increase in revenues and a 707% rise in net income, outcomes that reflect effective cost management and strategic investments in capacity expansion. Furthermore, the company's focus on its Alaskan mining project positions it well for substantial growth, particularly if it successfully develops a reliable domestic supply of antimony. The fifth and final stock in our video today is Hims & Hers Health Inc., ticker HIMS, in the healthcare services industry. Hims & Hers Health Inc. is a multi-specialty telehealth platform that connects consumers with licensed healthcare professionals, allowing them to access high-quality medical care for various conditions, including mental health, sexual health, dermatology, hair care, and more. It has a return on invested capital of 39.68%. Its stock has had better total returns when compared to the S&P 500 over the past 5 years. Hims has a levered free cash flow of $93.82 million, no short-term debt, a current ratio of 4.98, and an Altman Z score of 5. Today we have looked at 5 solid stocks that we once held in our portfolio that we thought would be good to analyze and present to our valuable subscribers. Kindly check the description for terms and tickers used in this video. At the end of the 12 batch winning stocks videos, we plan to release a special video for you all where we will share our winning strategy that helped us outperform the S&P 500, since we've created our portfolio last year with a total IRR on the portfolio of more than 50%. We would like to thank you all for staying till the end, and we wish you all have a successful investment journey. For more content, kindly like and subscribe.